Hi there, my name's Miles Pitcher. I'm the owner of Superior Lending. Thanks for checking out this video. I'm so grateful to those who watch our videos, but even more so to those who allow us to give them quotes on the loans they're doing. If they have questions on their loans, we love helping people with those. Even if we don't end up being your lender, we love helping people with questions they have, troubles that they're having, ideas on how to solve those. So please don't ever hesitate to reach out to my team. We love helping people. But today we're talking about a really cool topic that's one of my favorites, and that's figuring out how much home can you buy with a certain income. Right now, according to the census, the average American household has $71,000 a year in income. And we're going to use that number to see how much home can you buy with today's current rates and see just, what does it get you? So let's jump into this. So we're looking at FHA loans. And why are we doing an FHA loan? Well, number one, because FHA gives you the most purchasing power when it comes to loans. We measure things in terms of debt ratios. How much of your income goes to pay your new mortgage and to cover the other debts that you have? We can stretch that income or purchasing power further with FHA than we can in any other loan type, with the exception of VA, but most people don't have VA eligibility. So FHA is available to all people. The other reason is FHA allows for lower credit scores. We regularly help people all the way down to 580 credit scores, sometimes even down to 500 on those. There are some extra requirements when you go below 580, but it's a very, very flexible product, and it doesn't penalize the client too much in the interest rate for lower credit scores. So I want to show you what the rates and payments looked like back in November of 2022. Sorry, November 2nd of 2023. If you look at this, you can see that back in November, what we're looking at here is a credit score 740. We've taken that 71,000 and we've divided that down to where that monthly gross income's at 5,900. We have other debts of $600, like a car payment or something like that. With that, we calculate what our maximum monthly payment is, including taxes, insurance, mortgage insurance, and HOA fees, and it's $2,775. With other debts, so we're taking the monthly payment of $2,775 and other debts, the max that we can have is $3,367. With that in mind, the rate back in November of last year was 7% on FHA, and that would get somebody a max home price of $360,000. Now let's contrast that to where we're at today, January 25th, 2024. You can see the rates at 5.75. With that, you can see how much more home we can purchase at $410,000. And again, all of these scenarios I'm going to show you have a monthly payment of $2,775, right? Because that's the max mortgage payment we can get with this income, okay? So 410, what does that get you? Well, here's a home in Provo that's just under that, Provo, Utah. Here's one in Colorado. Here's a home in Hanover, Minnesota. Another home in Round Rock, Texas. Now, Texas, I know, has crazy expensive property taxes. So that would definitely need to be factored in. Kuna, Idaho, a little snowy up there. West Fargo, North Dakota. Cape Coral, Florida. Now, I wanted to show you one more thing here also. Over on the far right, what happens to our purchasing power if rates drop another 0.5%? So looking at a rate of 5.25, you can see that our purchasing power now jumps up to $432,000. So you get an idea of how those rates affect what you can buy, but this is all based on a household income of 71,000. If you have any questions or scenarios you'd love for my team to look at, here's how you can reach out to us. Thanks for watching this video.